Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. All right, guys, welcome back and thank you so much for being here. This morning, we're going to discuss exciting stock market news, notable earnings reports, as well as the morning's biggest gainers and losers. Just before we get into that, make sure that you're getting yourself entered for our TipRanks giveaway for when we hit 25,000 subscribers. All you have to do is be subscribed to the channel and leave a comment on any of our July videos to be entered to win TipRanks subscriptions and swag like t-shirts. Okay, now let's get right into this morning's exciting stock market news. U.S. futures are mixed today. We have Dow futures down 0.15%, the S&P 500 fairly flat, and the NASDAQ futures up 0.3%. Shares of Disney jumped a few percent at the end of yesterday after they announced that they would be increasing their monthly and annual subscription fees to ESPN+. Disney has raised the monthly price of ESPN by $1 to $6.99, and their annual ESPN subscribers will now pay $69.99, an increase of $10. However, Disney kept prices unchanged for all of its bundled services like Hulu and Disney Plus at $13.99 per month. In addition, prices for their UFC pay-per-view will also remain the same. Notably, ESPN Plus is on track to tap into the increasing demand for streaming and live sports as it rebounds after last year's lows caused by the pandemic. They recently won several rights deals and currently has approximately 14 million subscribers. Analysts rate the Disney stock a strong buy with an average upside of over 14%. Shares of ChargePoint dipped after they announced a secondary share offering of 12 million shares. Shares of the EV charging station company are down nearly 5% in the after hours. While the offering has not yet become effective, stockholders intend to give the underwriters a 30-day option to purchase up to an additional 1.8 million shares. All of the proceeds from the offering will be received by the selling stockholders. Analysts currently rate the ChargePoint stock a strong buy with an average upside of nearly 29%. According to a report from CNN, the U.S. FDA has issued a warning that the Johnson & Johnson COVID vaccine could cause rare neurological complications in some cases. The regulator said it observed an increase in reports of a rare neurological disorder called Guillain-Barré syndrome, or GBS, among people dosed with COVID-19 vaccine of J&J's subsidiary Janssen Pharmaceuticals. Reports of adverse events following use of the Janssen COVID vaccine under emergency use authorization suggest an increased risk of GBS syndrome during the 42 days following vaccination. Although the available evidence suggests an association between the Janssen vaccine and increased risk of GBS, it is insufficient to establish a causal relationship. No similar signal has been identified with the Moderna and Pfizer-BioNTech vaccine. With the most recent rating coming 11 days ago, the J&J stock does come in as a strong buy with an average upside of 12.5%. FedEx is the most recent company to announce they've signed a multi-year deal with Nuro for autonomous delivery vehicles. The partnership deal was initially inked in April and underwent pilot testing across Houston. The pandemic fueled a massive growth of e-commerce, making reliable and autonomous solutions a necessity throughout the supply chain in order to efficiently meet delivery demands. FedEx expects automation to increase safety, efficiency, and productivity of more than 570,000 FedEx workers. Their stock comes in as a strong buy with an average upside of over 18%. Shares of Lithium Americas jumped after it was announced that they inked a private placement deal with Arena Minerals worth about 6 million Canadian dollars. Lithium America engages in advancing lithium development projects, while Arena Minerals is an exploration stage lithium company focused on developing brine resources in Argentina. The investment will boost Lithium America's resource exploration opportunities there. Arena Minerals is in the process of raising 10 million Canadian through private placements to fund its acquisition of the Sal de la Puna lithium brine project in Argentina. Of this 10 million, Lithium Americas will subscribe for 6 million, which upon the closing of Arena's placement will result in them holding nearly 13% of the company's outstanding shares. The Lithium America stock only has one analyst rating within the last 3 months, but it does come in as a buy with an average upside of 51%. Now, moving over to notable earnings reports. And today kicks off the start of a busy earnings season. So we have a few big names to go over this morning, starting off with JP Morgan. JP Morgan's second quarter profit more than doubled. The largest U.S. bank reported a profit of $11.9 billion, or $3.78 per share, up from $4.7 billion, or $1.38 per share in the same period last year. Analysts had forecasted earnings of $3.13. Their revenue of $31.4 billion beat analyst forecasts of $30 billion, but was down slightly from $33.8 billion a year earlier. Their stock is currently rated a moderate buy with an average upside just shy of 10%, though we haven't seen any analysts update their price targets since their earnings were released. We also heard from Goldman Sachs, who came in well ahead of analyst expectations. Their earnings came in at $15.02 per share versus the $10.24 expected by analysts, and compared to a year ago earnings per share of $6.26. Their revenue also came in ahead of expectations at $15.39 billion versus $12.17 billion expected. Their stock currently rated a strong buy with an average upside of nearly 9%. And we also heard from PepsiCo, who also came in ahead of analyst expectations and increased their forecast for 2021. Their earnings per share came in at $1.72 versus $1.53 expected, and revenues came in at $19.22 billion versus $17.96 billion expected. The company also raised their outlook for their full-year adjusted earnings per share growth. They're now expecting constant currency earnings per share growth of 11%, up from their prior forecast of the high single-digit growth. The forecast implies core earnings per share of $6.20 for 2021. Analysts were expecting full year's earning growth of just 7.2%. Their stock currently comes in as a moderate buy with an average upside of 5.6%. Now, let's take a look at which stocks are this morning's biggest gainers and losers. Our gainers this morning are led by Created. Under the ticker CRTD, they're currently up 65%. They're followed by Orbsat under OSAT, currently up 46%, and SC Works under WORX, currently up 46%. Our biggest losers this morning are led by MediaCo Holdings. Under the ticker MDIA, they're down 21%, but this is following a gain of 311% yesterday. Followed by Mer Telemanagement under MTSL, they're down 13%, following a gain of 19% yesterday and even more the day before. And Simulations Plus under SLP, currently down just shy of 14%. So that is everything for Tuesday's pre-market morning update, bringing you up to speed with what you need to know before that opening bell. If you enjoyed today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Richard Allen is back from vacation, so make sure you stop by at 3 o'clock Eastern Standard Time for his Power Hour and to say welcome back. Thank you guys so much for watching. I hope you have a fantastic day, and I will see you back here next time.